We're coming back after a 2-week break, and now we're looking at the best trading opportunities on the ASX as the reporting season is wrapping up for August. We're also going to have an overview of the market indices and drill down on the charts to see where they're guiding us, leading us, and what it's looking for. The one guiding us through is Gary Glover from Novus Capital. Good morning, Gary. How are you?
Yeah, great, Chris.
Good to have you back. You've been very well missed, and so is your report and insights on the charts. We're starting off with the NASDAQ. So would it help if you kind of gave us a bit of an update on how we're plotting in 2023 to other years like 2013 and 03 and how we're going with your expectations?
Yeah, so probably underperforming slightly there in terms of other third years and other pre-election years. So, but the trend is pretty much in line there. So the sentiment has been bang on. So we've had our October and our March lows, and then probably August through to October is probably the choppy period. If you look through third years and also the pre-election years, that's sort of where you sort of tend to get a little bit of a can get a pullback in there, but nothing too big there. So the only thing there is the S&P has come back like 5.9% from the peak, which is probably slightly on the larger side there. I think there's a couple around, in that sort of 5 to 5.5% there, sort of in the last sort of 60 years. But most of them have sort of been in that, most of them sort of sit between sort of 2 and 5%. So basically pretty small pullbacks in there. So it's just slightly larger, but not really there. I mean, the key thing there is that pullback is almost exactly the same size as the previous pullback. So there's definitely some uniformity there. So same percentage, I think, within what's it, 5 points in sort of size and scale as well. So, and you often sort of see that sort of these, corrections in the past will be the same size and stuff there. So nothing out of the ordinary, I guess, is probably the main thing there. The only thing to keep an eye on there is that there was a few distribution days in there, Chris. So if we think about 2023, we have seen no selling this whole year. So any of the pullbacks, it's been very, very light. Hasn't been many, might have been 1 or 2 distribution days in total throughout that period there, through any corrected period. So it's just been, every time we've had pullback in the market, it's been very light sort of selling. So it just hasn't been any conviction in the pullback there, which is perfect, which is what we want to see. So even though everyone's been a little cautious, been wary, and this market's climbed the wall of worry, and there's been so many bears out there, the price action has shown no selling up until the last week or two here. So we have seen a little bit. We have seen in the last sort of 3 or 4 weeks, we did see a few distribution days there. So we saw some heavier down days with some heavier volume in there. So that's probably the first negative sign for the whole year. So it's just sort of something to keep an eye on there. So that can happen there. We've been pretty lucky so far. We just haven't seen any selling for the whole period there. So it's been pretty constructive there. Just so probably underperforming in terms of other third years and pre-election years. But still pretty constructive there. If we sort of look at the charts and stuff there, it's been pretty much identical to other previous years there, probably just not as vertical as other years there. And that's, obviously maybe a result of inflation being a little higher here. A few little headwinds as well. So, but look, so far constructive. Just don't want to sort of see too much more weakness there. Probably don't, I actually think last week's low, that's a bit of a key level for me for a lot of the indices. So for the NASDAQ, for the XJO, even the S&P, don't really want to sort of see a retest of that or break that, because I think it's at sort of pretty key levels there. So as long as it's sort of hold here, bounce here, that's not too bad. Sometimes you see that selling, it can be a little almost exhaustive of the sell-off as well. That's sort of the, as one person freaks out, another one jumps in as well. So, and there's still a lot of, have been a lot of bears, a lot of people are underweight this rally here, so a lot of people underperform. So the natural process there is that when the market has climbed this sort of wall of worry, and it's similar. When I've sort of been reading books, I was reading Chris Karch's book the other day, and they were talking about, the tech boom. And and this was the 2000 boom. And it's sort of very, very similar to what happened here recently. Was at the top of the boom. Was, it was all about earnings. And then in 99, the market sort of took off when no one expected it to take off. And then it stopped being about earnings. It was all about sales growth. And that's exactly what happened in 21 as well. No one was worried about profit P&L. All they were worried about was sales growth for some of these stocks there. And that was the last sort of phase and stuff there. But also coming out of it, everyone's a little bit apprehensive and underweight, and then so it just means every pullback there's still so much cash on the sidelines there that gets redeployed. So you probably send a little bit more volume on this last one there, but nothing out of the ordinary so far. So so one little thing to be cautious of there, just the first signs of distribution, but so far pretty standard sort of so far. So we just don't want to see price break below that level there. So we've had a bit of a bounce the last few days, so that is good signs there. But as long as we sort of hold these levels here, just don't want to see a break of that of the last sort of swing low here last week.
Well, you mentioned the ASX, and we are coming to the end of the August reporting season. How's that looking from the endpoint? So you're saying is it critical to hold for the Aussie to hold these levels as well, or where are you looking for next on the Aussie?
Yeah, look, I think it's hard one there. They can breach them sometimes there and then flick back and so so we've had a couple of touches there. So as we've had the low and then maybe the second and a third touch there, that definitely becomes more valid, Chris. So but the more touches you get on a certain trend line, the more valid it is. So but we're still sort of congesting under the high here, which we know that's a constructive sign for charts and stuff. If we look at all the stocks that have actually punched through the top here recently, most of them have been congesting and held up under the high. So we just want to see it sort of bounce here, which it has so far. Probably just don't want to see a breach there. For me, the critical level is probably the last swing low, which is around, I think it's like 6998, I think was that sort of low there. So as long as it sort of holds 7,000, that's probably more important for me. But the fact that we've got a few touches of that trend line definitely is telling us to watch that. And we definitely want to respect that as well. So so look, some signs of selling there. Definitely saw a bit more. We can see there on the XJO there. The last 2 weeks, the selling was up, which is can be a little bit of a negative, seeing some selling there. That's a sign that maybe it's also the buyers are meeting that selling as well, because that's a pretty tight second week down. So consider, if you think about how many stocks are sort of not blowing up here, but reporting season has been really volatile. There's been some stocks that have hit it out of the park and then just gone straight up, just gone bang, 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 bang. And then there's been stocks that have been sold off and just gone, bang, 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 all the way down as well. So it's been pretty volatile reporting season, probably one of the more volatile I've seen. And there's been a few companies that I've thought, oh, that's a pretty good result. The market wasn't expecting that, and then just sold off. It almost sells off for a day, and you go, what the hell's going on there? And then the next few days, it bounces back and it's rallying again. It's like, so definitely a weird reporting season, one of the more volatile ones I've seen for quite a while here. So, so just seeing a bit more volatility than we normally see. But but there's plenty of stocks there that something like the healthcare sector, that's been carnage there. So I think there's an opportunity there. So definitely a lot of stocks have been some of the big caps have been hit as hard as well. So it seems to me like they're sort of on their knees a bit here. So if the market can kind of hold here, there's plenty of stocks in that sort of bigger cap space that are probably can recover and build here. So that sort of, maybe fuels, that maybe the index can sort of can move higher here as well. So, but we're just got to make sure it holds its levels.
Well, before we jump into the individual trading opportunities on the ASX, probably just round out with the Dow. How is that comparing to obviously the NASDAQ, the S&P, the US markets? But it's been, from the value perspective, a bit closer to the Aussie, although it has broken up over that resistance level. So how are you interpreting the Dow Jones now?
Yeah, so it's probably underperforming in terms of the normal cycle here, but from a technical point of view, obviously broke through the top, rallied, to come back to the break zone. So, bounce there so far. So that's quite common behavior there. So if you look at, Wyckoff, or if you look at Weinstein, sort of, he's sort of set up there the what do you call it, like the normal sort of trade set up there, the stages and stuff there. Once you sort of break out, come back and retest the zone there. So there's nothing unusual here. But the only thing there was just a little bit more selling than you'd probably like to see. But that's maybe that's just a result of being underperformed here as well. So, but still favour a move into the end of the year. But just telling me just to be a little bit alert, just in case here in case we're wrong here. So can't. We had a pretty good run here the last couple of years there. Sort of market's been following the cycle sort of bang on, but at some point that they can vary from them. So we just need to be alert that, that we can be wrong and something else can happen. So at this stage there, it's sort of still fairly normal behaviour there.
Well, as we move into the trading shares, the first one that you've got on the charts here is Jumbo Interactive, JIN. We've seen that it has been sort of compressing, so sort of wider swings and then getting a little bit tighter and then tightening up to pop up. But it hasn't sort of broken through, except for the fact that there's a massively wide range week in the last week. So how do you view that?
Yes, it all looks pretty constructive to me. So we've broken, we've tightened up, we've broken out, came back for a retest, and we've had a pretty good update, and the shares sort of rallied on some pretty good price strength there. So looks pretty constructive overall. So in a volatile reporting season now, I think it's pretty good. And so that suggests to me that this can sort of kick on here. So we did add a position to the portfolio. If I saw any sort of congestion or a breather, there's probably one I potentially would add to, adding to winning positions, just waiting for a little bit of a coil or a breather or a little consolidation after it's sort of shown strength. So I think it does look pretty good.
And then you've got QUB as the next one in there. So you said a bit like JIN, logistics groups reported well and prices rallied strongly. That's that same thing, a huge range going from the bottom where there are a couple of touches to the top, all within 1 week, and the volumes above average.
Yeah.
Is that a similar sort of trade that you're looking at?
Yeah, I mean, the bigger picture is that we've rallied pretty strongly out of that early 2020 low, pulled back maybe only half of that range, so held that level pretty well, gone back up to retest the high again, and then sort of consolidated in a bit of a like a flag sort of pennant here. So again, we've still got that sort of consolidation there. So it'd be nicer to see that be a little squarer, Chris. Obviously, we like to see it more of a sideways sort of range there, but still a bit of a corrective decline there. And now we're sort of just broken out the top side of that. So that is pretty constructive. So a little, you'd probably like to see it a little squarer across more of a sideways move there. But yeah, that's, if we look at a lot of the stocks that have sort of reported well and consolidated under the high and then gone to new highs, they don't look too dissimilar to that. Probably just a little bit more robust and probably holding a little higher in the trend, but still pretty positive line.
Okay.
Any weakness there, any little pullback of that retest back into that sort of trend zone there, trend line, as we sort of know, sometimes they break out of that zone, come back, retest the trend line and go again. So any retest of that sort of trend line there would be probably have me encouraged to, maybe get a little position there. So it's always hard to sort of jump in there after it's popped a bit, but yeah, still looks pretty constructive.
Well, you mentioned healthcare earlier in the piece, and you've been talking about them being hit pretty hard. But look at this chart for Ramsay. That's north of 84 a share.
Yeah,
it's been belted to under 49 with this huge week, obviously reporting, falling through the floor and coming back to sort of the lows that we saw at the peak of COVID lockdowns and hysteria of is the world going to end?
Yeah.
How do you see this price action here on Ramsay?
It's funny, these are sort of charts I've sort of seen, so I look at the false breaks a lot. So look at, when a market sort of goes back to retest the high, it makes a margin new high, and then it will break back and go retest the previous low. And it's the same, sometimes previous new lows can go back and retest the previous highs stuff there. So I see it all the time there. And I remember 2007, the S&P made this big broadening top there. And I thought, wow, it just, on the weekly, made this margin new high and it started to sell off. There was aggressive selling coming off that 07 high. And I thought, wow, well, that's a margin new high. That tells me this can come back and retest the margin new low. And that was like a 50% correction. I thought, sure.
Bugger stayed fall 50%.
No, that's how the box move, so it can't happen there. And then as it started to occur and started to get sort of 30% down, I thought, Jesus, this thing's, what if this could get to that level, So, so that's, I look at the Ramsey, I look at the same thing. I thought, there's no way I can get down there. It's like, it's not too good a company to get belted that hard. But there has sort of, as much as the healthcare, the numbers have improved, but because they haven't improved fast enough, everyone's been looking for bigger turnaround in a lot of the healthcare store stocks. So they haven't, and there's probably a bit of a hangover there too. I was sort of, there was a question with a mate of mine who said that in the health industry there, and he's sort of saying, they've been wearing masks for 3 years, and the plastics, and it's been a tough grind for everyone in that industry. So they haven't had a great time there, and so just probably it's just been a probably tough grind for so just maybe sort of think, maybe there's sort of normalization going back to the normal for the industry there. Just might take a little bit longer than everyone's anticipated here. So definitely a backlog of elective surgery and stuff. I had my hernia done last week, and I was pretty busy. I think the surgeon had people lined up all day to go in there, bang, bang, bang. So definitely think there's still a pretty solid industry there, but just taking it a little slower there. And I just looked at Ramsey, I think CSL's had pulled back, FBH. I mean, it's just ResMed. I mean, some great companies really got sort of took a bit of a bludgeoning here over reporting season there, but that probably sets up an opportunity as well. But I thought if Ramsey came back and retested that low, 46.12 there, any break of that zone, I'll be all over that. So I don't know if it's going to get down there. So it sort of looks like it's tried to bounce the last couple of days, so maybe it's not going to go down there. But any margin new low, that'll be, I'll be chomping at the bit to see that. So yeah, but I just think it could be a really good opportunity there, because we've seen how fast they come out of these lows too. When they get when they get really harder like this, they can bounce pretty quickly. Even sort of in 2017, little margin new low there as well. That had a pretty good bounce as well, even though it didn't sort of go to a margin new high. But yeah, definitely a stock that's just it's a bit like Elders and stuff there, when that's a lot of V-shaped highs and lows and stuff. They look how pointy the tops are, look how pointy the bottoms are there. It just does not build. It's like a heart machine here. It's sort of up and down, up and down, up and down. So that's the nature of the stock there. So you got to learn the personality of each stock you're trading here, and it's definitely one of those stocks that can turn here. So definitely watching that one really closely there. And the sector looks pretty interesting to me as well. So, yeah.
Well, you've got three more. One is Mirvac, MGR. So, very different company. Property developer Mirvac. We're seeing compress and coil up a bit here. So, you've got an overhead line and then a rising higher lows. This thing's kind of compressing here. And then what's really catching my eye here is just these 1, 2, 3, 4, 5, 6, 7 consecutive weeks of tight closes. So how are you interpreting this whole structure here for Mirvac?
Yeah, so I mean, normally this is pretty bullish there, Chris. That's normally like a sort of ascending type of sort of triangle there. It's our classic VCP pattern. So normally that's just it's probably 80% of the time, 85% of the time this is a bullish sort of setup here and breaks out here. The only thing I will say is that throughout that pattern there's definitely signs of selling, some strong selling on some of those pullbacks there. So there hasn't, like with the classic VCP, you've probably seen lighter selling, and more sort of stronger, So seeing some okay volume on the way up there, but we have seen some heavier selling on the pullback as well. So that's the only thing that's got me a little hesitant there. It's just not the perfect setup there for that chart there, but we are starting to see the volume elevate last 3 or 4 weeks here. So this is getting poised for a move here, breakout here or something. So just want to sort of see. I'm probably, this is one here. I just normally something like this, I probably would have got a starting position, and then I'd sort of add to it if it pops out, and then I just keep my sort of stop nice and tidy. But I've held off here just because that volume is just not classic. It's not perfect for me. So I just want to see. I want to see confirmation. I want to see a breakout here, because I think if I see a breakout there, if you remember that we had ABC at that little tight consolidation there. So if you just wait for the break, it's fine. That was a big move. Just once it took off, it was fast there. So just want to see the break here for me. So just want to see some confirmation that it is going to punch through there first.
Well, the other ones you've got, we moved to a gold producer, so Rallies. And I know you and I have been sending emails back and forth looking at the strength of some of these gold producers and the list, who's been leading. They've been similar sort of thing here. It's tightening in its volatility range a little bit. How does it register to you where it's come out of its lows, it's rallied, and then it's sort of just put into a bit of a compression there? How do you view that setup?
Yeah, so as the market's been weak here, Chris, obviously these have been holding up pretty well. So similar to what uranium was doing a month ago. And so there's definitely a sector on the radar here. And then the price action, I mean, that's a real sort of tight consolidation there, sitting on top of the previous high as well, maybe even some spacing in there. This one does look pretty good. So the volume has sort of dried up through that period, and there was some pretty healthy volume on the rally. So each of the rallies so far have been some pretty robust volumes in there. The pullbacks have been pretty modest there. So that is pretty good. And that stock is showing definitely relative strength versus the sector. So a lot of the sector has had some deeper pullbacks there. So something like Perseus, PRU, I quite like to look at that. But that's had a much bigger correction and much deeper. Whereas Rallies is held tight here. That's showing real strength. And the RSG as well. I mean, that's had a bigger pullback, which is probably not so good. But the thing I like about this one that really catches my eye is just the volume that has gone through there, and that is So when I see big volume, that's when you can see big moves, and that has sort of gone from 20 cents, 50 cents. That's more than double on that rally, and then pulled back here again. So and the volume sort of pretty modest and sort of dried up here again. So we know historically when we see the big volume come in at those lows and get a big move, that those are the ones that can have the bigger moves, longer term. So that one there, as much as it's probably a larger correction, it's holding up there. But so a few of those stocks look pretty interesting. So definitely keeping a close eye on there. The volumes have been a bit light here so far, Chris, out of that low. But if you go back and study sort of those sort of stage analysis there, they can turn here a lot of volume, and then the volume will come in later. So that they can start this way. So that's it's not uncommon as well.
Well, there's some really good ones to look at. You've got different sectors, different parts of the economy to look at after reporting season. You've got ones who have been taking an absolute bath into reporting season and possibly beyond with their expectations. But the trading setup and those false breaks, especially at Ramsey, look like really something to look at. Now, I know you've been away for a little while, and you may have a trading quote that you want to share. Is there anything that's popped out to you in the last couple of days where you know what, this is really feeling like it's really describing the moment and the markets at the moment?
Yeah, there's a couple there actually. I was gonna there was one last week there which I was going to say there, but this one's probably for me personally. It's sort of something that I need to remind myself that there have been many times when I, like many other speculators, have not had the patience to wait the sure thing. I wanted to have an interest at all times. You may say, with all your experience, why did you allow yourself to do so? The answer to that is that I'm a human, subject to human weakness. That was Jesse Livermore quote. And it's just a reminder that, you can have all your rules and stuff there, but if you don't sort of keep yourself tight and disciplined there, and I did this yesterday, I made a trade which was outside of my parameters, was a bit of a reporting season. I just saw a result which I thought was a bit of a surprise. So I thought the market's going to like that, and it did like it off the open, but then there was no follow through. So I got sort of caught doing a trade I shouldn't be doing. But yeah, it's just a reminder there that stick to your rules, fully process. Don't get drawn into things like reporting season now where you sort of see opportunities there. So just a reminder to
Stick to the rules.
Stick to the rules. Yeah. It's a reason why the rules and the process and make money, and all the best people, even some of the best traders get swayed out of their little out of their lane. Sort of as say to clients and stuff there, try and stay in your lane. So pick your lane and stay in it.
There's some good quotes, and Jesse Livermore himself. So we say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.
Gary's mentioned his trading insights, research, and setups. There's a playlist on the right-hand side where he's been through them in quite an honest, reflective way, like he has just then. Those snippets on the right-hand side. There's also the Friday one where we look at the 30-30 list, the top momentum companies, and the launchpad stocks, and Gary pulls out his favourite charts each week. And then the left-hand side is his Twitter or his X handle if you want to follow him there.